Hi, this is Charles Kelly, Money Tips Podcast. If you want to find out more about my podcast, you can see them also on YouTube at Charles Kelly Money Tips Podcast. But today, I want to talk to you about the savers rates in the UK. Now, these are rates paid on bank accounts and current accounts in the UK, which have, let's be fair, have been held back by the banks. The banks are increasing mortgage rates, and the average 5-year fix now is around about 6%, but they've been not increasing the rates for savers. So as bank base rates have gone up over the last 13 Bank of England meetings, so in the last 18 months, they've gone from almost 0 to 5% base. The banks have been lagging behind and leaving people sometimes in accounts paying less than 1% on their money. So it's almost criminal, actually. You know, it's a real shame. And some banks have said, like the HSBC have said, yeah, they have increased rates to an average of 2%, blah blah blah. But that doesn't take into account that a lot of people are left in accounts paying less than that. And you know, I went into a NatWest account bank when it was open. It's shut now, and I took a friend of mine who was an elderly lady, and to query why they were still paying her such a low rate on her money. I think she was getting like 0.25%, and she had quite a lot of money there. And the bank said, no, we're not planning to increase that rate. And I said, but you've had 3 or 4 bank base rates since, you know, with this account in the last few months. They said, no, we haven't increased the rates. There's no plans to, but you can move it to this account, or you can move it to that account. And then there's always little strings attached to the ones you want to move them to. So in the end, she didn't bother. She said, oh, I just can't be bothered. I said, well, we'll maybe go across the road and move it to somewhere else. No, I just want to leave it there. And that's what a lot of people think. It's that sort of inertia, this fear of moving and change, that keeps people locked into accounts that are paying pathetically low interest rate. Well, now, actually, finally, the government's woken up to this. Chancellor Jeremy Hunt has said, we need to do something about this. I mean, he said here, told the BBC, this problem needs solving, he said. This has been going on for years, in fact. You know, even since the last financial crisis, savers have been losing money. And this comes at a time when millions of households are struggling to meet the sort of normal cost of living. They're paying high interest rates on their mortgage, high energy costs. Even though wholesale costs have come down, we're still being ripped off by the energy companies, and food inflation running at 20%. So it's a very difficult situation for most people. And that's, the banks are not helping here. So I know we hear about high interest rates, and it's a big problem for mortgage holders, but don't forget the savers. People who've saved all their life have been receiving low returns since 2008. And you know, and they've been receiving next to 0 on their rates, on their savings rates. Now, yes, you can move it to a challenger bank. Yes, you can move it here, there, and everywhere, and tie it up for a year and that sort of thing. But a lot of old people don't want to do that. A lot of elderly people are not familiar with the internet banking system. And then if you go down the high street, most of the banks are closing down now. The banks have closed hundreds of bank branches. So what do? They normally just stick with one, and that's it. But loyalty doesn't pay. So do look around, do shop around, and try and get the best rates for your money. I'm just going to share a screen. Now, I know a lot of you watching on TikTok Live will not be able to see this, but I want to share this screen for people watching on my YouTube channel, and you can see some of the rates that are being paid here. Now, the best rates have been paid by the challenger banks. They call them the challenger banks. These are banks that I would say you could describe them as banks no one's ever heard of, but they're still a bank, and they are, you know, they're fair enough. They're regulated by the banking industry, etc. So yeah, your money is safe up to 85,000. But to say to someone who is elderly, and you know, why don't you move this to this XYZ challenger bank? Who are they? I don't know them. I can't see them in the high street. I'm not going to put my money there. So that's the dilemma for them. But you can get rates of, you know, 5 and 6% if you're prepared to tie up your money into a bond or leave your money in these banks. That's fair enough. But for most people, they're not going to do that, and that's what the banks rely on. They rely on your inertia and lack of ability to make that change. The same with poor current accounts. That very few people switch current accounts or checking accounts, and that's why the bank can continue to give you a bad service or poor returns on your money. And don't forget the big high street banks in the UK, the Barclays, NatWest, HSBC and Lloyds have got a virtual monopoly on the high street. Even Lloyds own Halifax, or one or the other one. Halifax own Lloyds. So they've got a monopoly. So wherever you go, you're faced with these banks. Santander is another large bank, but the big four tend to have most of the business. And that includes for the lending as well and the savings. So it's a difficult situation. Now, don't forget, if you're getting a return of, say, even if you get 2% from the bank and inflation is at 8%, 4 times that amount, your money's been eaten away by inflation every year. Don't forget that even if the banks increase the rates slightly to a fairer deal, because the base rate is 5%, they're charging 6% on mortgages, but there's a 4% difference between what they're giving to people on saving. Even if they increase that, right, and they close that gap, are you going to get a good return on your money in terms of real rates of return, in terms of returns against inflation? The answer is no, because money in the bank will never keep up with inflation, and you'll always have less spending power as the years go by. In order to get a better return on your money in the long term, so that you can build wealth and become financially free, you need to invest your money into real assets. Assets can include property, the stock market, precious metals. Now, you might think, well, I don't want to buy properties, or I don't want to invest in the stock market. I don't understand it. It's high risk. Well, you don't need to be a stock market expert. Warren Buffett, one of the greatest investors ever, said that for the average person, they are better off in a tracker fund, such as a Vanguard tracker fund, which just tracks the market. And he says an S&P tracker fund, which has returned over the last few years an average of 10% per annum, is as good as any. And most active fund managers will probably not beat that anyway. So the S&P 500 is the top 500 companies in the US. It's a big market. There's tracker funds for the UK. There's tracker funds for Asia. And they track the market. They track the stocks and shares in that market. And that's basically what you're doing, is owning a piece of that company. You're owning a share in that company. And that company will pay dividends, which will add to the value of the tracker fund, and so on. So there's ways of investing to increase the value of your money over time, so that you can build real wealth and become financially free. You don't need a lot of money. You can save from at least little as $50, £50 a month into those tracker funds. You can also save into your pension scheme, which is going into similar kind of funds. In the US, they call them mutual funds. Here we have unit trusts or investment trusts. There's REITs. There's all sorts of ways of investing in a collective fund to increase the value of your money. You can even invest in funds that invest into property as well, and precious metals, all sorts of funds. But don't leave your money lying in the bank. Of course, you need money in the bank to cover emergencies. But I've met people that have got hundreds and hundreds of thousands, if not millions, sitting in a bank account earning less than 1%. I've met people who've got 30, 40,000 on their current account earning zero. It's just crazy. You just don't need that amount of money sitting around. So do look at this. Look at how you can preserve and at least increase the value of your money over time by checking around on what's going on out there. Now, look, if you need help with this, if you need, if you'd like to know more about how to become financially free and build up wealth over time, so that you could retire financially free, or just be financially free when you want to maybe quit your job, for instance, then I want to help you, because I'm running a free webinar, and it won't be this coming Wednesday, it'll be the Wednesday after, but you can register now. It's called 3 Steps to Money Management and Financial Freedom. So I want to help you get control of your money, learn how to invest that money so that you can build wealth over time. And I'm going to put a link up to that, or it'll be in my bio, or it'll be thereabouts. I'm sure you can find it. And go to that link, register for that, and I'll then send you a reminder before the webinar. So it's absolutely free. I'll give you over an hour of my time to show you how to get control, I'm going to give you some special tools to get control of your money, so that you can learn how to save and invest and build wealth over time. There's no shortcut to this. I'm not offering you a get rich crypto scheme here. This is a way of properly building wealth over time. So look, that's all for now. If you've got any questions, you've got any comments, please put them in the comments below, and I will see you again in the next video. So thanks for listening, and bye for now.